Having discussed all the themes around FATF, sanctions, UBOs in the morning, now is the time to go through some of the technology aspects and how technology can help to meet some of these compliance objectives. So I'm going to start by introducing the panel first. As you can see, it's a full house on the floor. I'm going to start with Mohammed. Mohammed is the head of RegTech for MoneyGram for APAC, Middle East, and Europe. I don't know why you've left only Africa and US aside, otherwise you would be global head. So good to see you here, Mohammed.
Thank you.
Right next to Mohammed is Jesse. Jesse is in a very fascinating role right now, where he works with regulators around the world and helps them with cryptocurrency compliance and how technology in the cryptocurrency can help some of the regulators as well. Right next to Jesse is Ed. Ed is the president for Arankis, a software company which is based out of US, works on KYC, AML, and some of the EDD technologies. Prior to Arankis, Ed was working for companies like NICE, Actimize, and SAP. Welcome, Ed. And last but not the least, Umair, sitting right at the end, is the partner in charge for KPMG. Prior to KPMG, Umair was with Deloitte for a good 10 years. As you can see, we have a great panelists here, and I'm hoping it's going to be a very, very interactive discussions. One of the challenges of hosting a technology panel on a RegTech or a non-RegTech conference is you go to finish everything in 45 minutes, something that needs one full day. One of the positive sides of that is you get a good mix of audience, and we got some young enthusiasts in jeans and others in suits. So with that, I'm going to start with some of the global RegTech trends so far. Again, we've seen so much of hype around RegTech. I won't call it hype, so much of reality and some of the other technologies. It all started, or primarily started from 2008, when the financial crisis broke out. Since then, around $321 billion has been imposed on banks around the world in fines. 13 banks of these constitute 93% of total fines, majority of them in US. Global RegTech capital invested has been $10 billion since 2014. Half of them, almost little less than half of that, was raised in 2018 alone, which is around $4.4 billion. Again, a trend that we have seen increasingly going high. And this is expected to reach around $80 billion in 2020. These are mind-boggling numbers, considering that the internet was born little over 25 years. I'm going to start with Ed and take his opinion on why is such a phenomena. Is it the regulations which is driving the investment in technology? Is it a peer pressure? Is it something from the board? What exactly is happening?
Well, I think if I really had the answer to that, we could all go home. We've seen a proliferation in RegTech experiments. I flew here from New York, and by the way, Vishal, thank you for having me. Very happy to be on the panel. In North America and Western Europe, there has been a huge, almost tsunami wave of RegTech projects in financial institutions that we've been exposed to. And it really fits each of the headline categories that you mentioned. In some cases, it is a board initiative because there's an initiative to drive down costs. In other cases, the CRO and the CCO, maybe they've just received a consent order. They're worried about how can they have a global policy followed unilaterally by all of their analysts when they have 10,000 or more spread around the world. And in some cases, it literally is me too. When you go to a conference and you see stories or you hear stories about other institutions who have some type of three-letter acronym project, whether it's RPA, which is robotic process automation, machine learning or artificial intelligence, you think, well, we do not want to get left behind. And lastly, what I'll close with is in some areas, Vishal, we actually see the regulators themselves sponsoring innovation centers. This has happened in the UK with their regulator, and of course in Singapore, the Monetary Authority of Singapore is very well known for investing not only in institutions, but also in the startup sector to proliferate the technology.
So it clearly is a mix of all of these factors. And Ed, again, based on your experience, have you seen a different adoption of these innovative technologies in different countries? So spanning from US, Europe, coming to MENA, do you see a difference in adoption?
I'd have to say there's a fallacy that since I've been in the business for close to a decade, that everything starts in the US. And I say that being an American as well. That's not really true. We saw a lot of the adoption and really progressive applications of machine learning actually happen in Singapore. And that was because you had a very progressive regulator that was engaging the institutions directly and saying it's okay to experiment. In the US, the New York State Department of Financial Services has also come out recently saying it is okay to experiment. We expect this. And even the OCC recently sent a letter out saying the same thing.
CFTC also is engaging in the CFTC Labs program. I mean, you're seeing it across the board.
So, Vishal, I guess I would close by, I don't really think that from a practitioner's point of view, any one region of the world has the hub as being the bastion of where those projects, we see it pretty uniformly.
True. I think at this point, it's also important to understand what is the biggest pain point of financial institution and some of the other organizations around the world in terms of adoption of regulatory technologies. With that, I'm going to open up the polling question here. I guess we'll have 12 seconds to answer it. If there's a function, if there's a compliance function and you need some help, that compliance function needs some help in some innovative technologies, which function is going to be the first in adopting it? Is it the anti-money laundering teams, or in other words, transaction monitoring? Is it going to be the KYC team within the compliance function? Is the bigger pain point on regulatory reporting? Or do you see challenges in terms of your normal MIS reporting? Which one would you adopt first in terms of innovative technologies? Wow, okay, great. I'm actually happy there are no surprises there. Again, considering the investment that we talked about in the global RegTech companies, half of that, actually 60% of that actually went into AML and KYC technologies. Jesse, you see the similar trend globally in terms of AML and KYC adoption?
Yeah, I mean, by and large, with KYC, usually that's the first line of defense, right? The onboarding process is integral to, cutting off illicit activity. And following that, based on transactions and volumes, obviously that's going to be the next line. So that trend makes perfect sense.
And especially talking about crypto world, how different is that crypto world from, let's say, fiat currency? Are the challenges different in terms of compliance, or you see similar challenges?
One of the interesting things when I got involved in the space, I was coming from Refinitiv, and I should take a moment to thank Refinitiv. I feel at home. I love Refinitiv. I loved the precursor when we were part of Thomson Reuters. So thank you very much for the opportunity to be here. But in looking at emerging risks, when you identify from an AML KYC perspective, an AML CFT, perspective, it was identified as an emerging risk and a major threat, right? But then when I identified certain services that provided blockchain forensics, like Chainalysis, one of the things that I started to learn, and now I'm a firm believer of, is the fact that this is actually a regulatory technology. It is RegTech. There's more transparency, and there's actually more trust that is available in relation to utilizing that kind of technology than you have in traditional financial services. And for two reasons. One, it's permanent. Blockchain is permanent. Two, it's immutable. It can't be, things can't be forged. They can't be changed in relation to the distributed ledger technology that it's sits on. So in relation, and the third thing I should say is, in terms of transaction monitoring, it can be done in real time. So if you combine those factors, right, if you implement blockchain forensics, if you're implementing this kind of service, this kind of RegTech, with appropriate KYC for the onboarding process, you couple them together and then you have an investigative capability as well in relation to reporting requirements. It's more secure in many ways than what we've seen traditionally.
And do you see an issue in terms of education around that? So,
I think the biggest issue that we have right now is in relation to education. There's additional issues, obviously, in relation to beneficial ownership identification, things of that nature that are still being worked through by FATF and other bodies. And you know, it'll be interesting to see what happens in June when regulation is formally released by FATF. And, you know, the industry is having major issues with some of what's been proposed that they released in February. Yeah, you know, I think that one of the issues definitely is education, knowledge, and capacity building.
Mhm.
The second issue is that you have an industry that's very new, that's coming from individuals that are not familiar with anti-money laundering, with compliance practices, with what that looks like, right? And even the illicit use cases in some cases as well. So it's kind of connecting the dots, building trust, taking the folks from that side, right, from that industry, connecting them with financial services, with the compliance professionals that have the background, the experience, and the education, educating the financial services side on the benefits from here, and then bringing in government, law enforcement, the regulators, connecting them all. And I think that's how you're going to be able to map out what a really actual effective framework is, and eventually then that can possibly lead to institutional adoption as well.
Great. Another thing we hear so much when you talk about regulatory technologies is, you know, things like machine learning, artificial intelligence, RPAs, et cetera, et cetera. In practical terms, which of these technologies you've seen more being used in compliance functions, and some of the use cases, Ed, Jesse, and Mohammed, you can also comment on this one. But some practical use cases of some of these technologies that we can bring to business.
Sure. Well, in terms of analytics, I mean, one of the things that we've seen in relation to machine learning is, it's you know, as I said, the blockchain is permanent, it's immutable. Transaction monitoring, all of the transitions exist and are public there. So when you adopt machine learning, you're able to identify patterns. And patterns are then are able to identify entities. So that's being employed kind of across the board in relation to successful identification. So certainly that would be primary in this space.
Yeah. I'll just top on to that, to the results that we got. It was so interesting for me is that as MoneyGram and as people have seen, these are the two areas that we have started experiment. And we're doing that equally. So if you onboard a consumer, we're helping, I'm just going to restrict because we have less time, it's about eKYC. So what's happening is, I'm just going to ask the audience who know the abbreviation GAFA or JAFA, whatever you call it, GAFA.
A show of hands, I guess.
Anyone knows? All right. It's Google, Amazon, Facebook, and Apple. We've basically seen, and we've looked at our consumers, what they've basically done is that they want to replicate whatever they're getting on the social and social media platforms onto anything they do in life. I don't know how many of those guys are millennials here. I'm just barely millennial. But if you could see that in the next 10 years, most of the consumers will be very young. And they would have been born with mobile, well, not born, but at least had a mobile phone with them when they were in their teens. My 4-year-old operates a YouTube, has a channel, and posts videos. So what we basically did was that we made sure that we did eKYC channeling, whereby a consumer could take a picture where it's allowed, under regulation, Europe has that, PSD2, stuff like that. And they'd say like, all right, so I'm actually not going to go into a Tesco or a UK Post to do my transaction. They're taking their phones, taking a picture of themselves and a copy of their ID, and then they're able to transact. So eKYC, for me, the onboarding bit that has been optimized, and that for me is perfect. I don't have any guy going out to a guy saying, yep, he had his original ID in front of him, I looked at it, stamped my original scene. No, I have that document, and then I have government databases against which I could check. So for for eKYC, I would say that's the onboarding part. For transaction monitoring, we haven't posted that live yet. We're working on false positives. So I think there's a lot of people here who'd be like, yeah, that's the bit. We're still going through that. I just want to add a point to our earlier conversation about the regulators. Actually, in the U.S., they've come out and said to us in a conversation, Mohammed, don't be afraid to experiment. And if the latest technology finds out your system weak somewhere, we're not going to take that as a weakness, because we're going to move forward with the idea that something that was never going to be improved is now going to be improved by this new technology. So this non-liability on what we find is what I like, and I think that was similar in Singapore, but I haven't had that conversation with that yet. But just wanted to highlight those two things. It was interesting when it came 39-39, was that that's actually the balance in our organization.
I guess it also differs a bit in your line of business as well, because if you look at the innovation which is happening in the digital space, the payment companies, the companies that are in the business of moving money, have got the biggest advantage of that in terms of scale, mass, and everything else.
Exactly.
One of the conversations I was having with one of my MasterCard friend is about new techniques of authenticating, and he raised a very interesting point about vein scan. So, I was like, okay, biometrics is good, fingerprints is good, but how about the vein scan? And he said that's coming next. So
No way.
clearly the innovation that could happen in the payment industry also gives you a free kind of, not hand, but more chances to, more room to play with technologies.
Yes, and I just want to give you a heads up to the banks here, is that we were the most disrupted industry for the last 2 years, and we've actually just had to reinvent ourselves.
Sure.
So this is actually an expectation of the consumer, and consumer moves the market. And 2 years ago, about a year ago, I never got a call from the CEO. On that day, I did, and he said, Mohammed, we're forging a group that's technology, legal, compliance, operations, and strategy. You guys are going to be our eyes and ears on the market to see how these GAFA, and all other companies are going to disrupt us, and you're going to give us that view. I'm just highlighting the way things are moving. If we don't innovate as financial institutions,
Sure.
GAFA has a real play in taking over. I don't know, I might sound a little optimistic on there,
Sure.
but the way they've actually disrupted the payments space caught us off guard.
Yep.
So if we were comfortable in our boots saying, oh no, these are guys who don't know. They've had major issues, data security, stuff like that. I don't know, you guys know about Revolut, they're having problems. But they go towards the regulatory solutions
Sure.
in a very innovative way. They will stumble, but
Sure.
eventually
Sure.
they will come back.
I got to be honest here, I'm with the audience. When I heard GAFA for the first time, it actually is today. So I'm with you guys. I didn't hear of GAFA term before. Maybe I'm getting more old for that. A very interesting aspect of technology is how it relates to people and the way they work on a day-to-day basis. And it's an age-old concern, at least for the last 10 years, where we've seen some of the mundane tasks of collecting data, creating graphs, is actually going away to machines. Quite happy, first of all, to take audience view on how it is impacting, how technology is impacting human jobs, and then we are going to come back to the panel once we get the results. So again, it's time to test those votometers and see if they're working or not. You should have question on the screen now. That's not the question, by the way. Yes, now. So how would regulatory technology impact human jobs in 10 years from now? And 10 years, I guess, is a big horizon. A, technology would fully replace humans. B, technology would make people and jobs more specialized. Technology would reduce human employment. And then finally, technology will have very little or no effect on human jobs. Again, I guess 12 seconds for you to vote. Okay, very interesting. We had few people in the morning who came here with Uber Chopper, and I guess we have few here who would believe that technology would replace human jobs. Again, unlike in the morning, no need to identify yourself. We know, we understand. But again, no surprise there. Going to Omer now, I think. Omer, your organization work not just on technology, but also on people and processes, and how some of the organizations can implement a more holistic approach to technology. Have you seen this happening in the region as well? You see more focus on technology, or you see people are still, or the organizations are balancing properly between people, process, and technology?
Sure, sure. Thank you. Thank you so much for the invitation. Lovely to be here and see a lot of familiar faces in the audience. I think, in my humble opinion, technology, whilst is a great tool, we sometimes forget that the criminals have actually got access to the same pieces of technology. So it's not that that technology is proprietary for the three lines of defense, it's actually on the attack side as well. And if you think about it, the financial crime industry, in my humble opinion, has probably had the most level of innovation compared to a lot of other industries. In fact, the criminals always come up with great ideas, and it's the regulators and the financial institutions trying to play catch up, right? So it seems that the crime side has got access to that technology and is often able to better deploy it to outsmart us, and then we're trying to catch up. And now when we come to organizations and them trying to adopt and implement different technologies, I think they often forget that technology in isolation doesn't work, and it cannot work. In the absence of the right processes, in the absence of the right governance, and critically speaking, in the absence of the right data, you can have the most sophisticated analytics engines or machine learning or artificial intelligence, but all of that learning sits on top of the data. And if you don't have good data, then that artificial intelligence learning and machine learning is going to get corrupted just as corrupt as the data is. I think when I was looking at the survey results, I personally think that in regulatory technology specifically, I think the answers are somewhere in the middle. That a lot of the low value activities that are being done in compliance functions, a lot of copying, pasting, checking one system, checking another system, I think a lot of those should disappear. But I think when it comes to really sitting and thinking about what activities are actually happening, I don't think technology is going to be able to crack it anytime soon, because I think there is still a lot of human intelligence and human thinking which comes from experience that I don't think machines will be able to replicate. But at the same time, as one of my suggestions to clients is don't overthink about technology. The use of technology is fundamentally dependent on the quality and caliber of your data, but as similarly the quality and caliber of your people. And if you invest in the right resources, then certainly I think that forms for the best line of defense as opposed to just relying only on technology.
Yep. And it's a bit like, I've always been driving a manual car, and suddenly I get a automatic car and I really don't know how to drive it. And this is a challenge we are seeing as well in terms of upskilling of people. Again, it's not about people's job at risk. It's about more specialized skills being introduced to run with those new technologies as well.
If I could just add to Amir's point, which is very relevant, is that 15 years ago, we still had technology come through. We had MIS systems that were going to fix everything for the banks and stuff like that. So I think my view is that some of the questions I always receive is, how is fintech now going to be different from 10 years ago when a couple of fancy guys from this swaggy suits came and sold me this ERP, and I still don't have the solution. And that's where I think governance comes in, and the tone from the top, and an understanding from the top. And I believe this time, I think we're on the right track. If my CEO or my board are talking about blockchain to me, that kind of gets to me saying, oh, do you know what a blockchain is? So it's interesting that people are, and our senior management is reading through, but I totally agree in terms of data and governance.
Great.
I think, Vishal, if I could just add to the point, the other challenge with technology in the compliance function is that compliance is still seen as a cost by many organizations. So whilst we like to invest technology on the credit and analytics and sales and marketing side because we can see a direct impact on the revenues, I think compliance is still seen as a cost, and I think there will be a bit of catching up that the function will have to do before organizations really start to appreciate investing dollars in compliance technology as opposed to sales and marketing and analytics.
Great. You've actually brought me to my next question, which is a great segue. Again, in my personal discussion with some of these smaller organizations, we've seen that they are burdened by the cost of compliance. On one side, they have pressure from their board, they have pressure from peers, some of the other regulatory pressures we discussed in the morning, and then on the other side, they have pressures to meet their profit margins as well. And this phenomena is actually leading to closure or eventually closure of some of the businesses. Again, just going to the panel, have you seen that happening? Do you have any comments on that? Do you think it's real?
Yeah, I think it 100% is real and valid. I think one of the biggest pain points for financial institutions that are actually developing some of their own technologies to try and combat this ties into the audit trail and being able to justify the way in which the technology is working to the regulators, right? And if that can't be done successfully, the problem is that it can't really be deployed. They can't do that. The good news is because we have some of these sandboxes and because we have more partnership, public-private, coming from regulatory bodies willing to work with financial institutions and those in the industry and encouraging this kind of technological development working together, I think that's how we're eventually going to be able to see justification occur, and then the technology will be able to be adopted. So,
Okay.
If I could just add, Vishal, one of the things that I'd like to offer is a headline. The use of RegTech innovation technologies, from what we've seen, doesn't always sit with compliance, and compliance isn't always under the anvil of burdensome proof to justify the experiment. Quite the contrary. Within our company, we've seen 3 customers where it's actually not compliance that is driving the use of an innovative technology. It is actually the line of business themselves in partnership with compliance. Each of these 3 institutions are focused on some variation of streamlining onboarding. Why? Because they see it as their ability to be more competitive, streamline their relationship, have a better relationship with the customer, and to do it much more efficiently. The other thing that's happened over the last 3 years, maybe 4 or 5 actually, is we've seen operational executives now have to attest to the efficacy of their knowledge of the bank's overall compliance systems. CAOs and COOs in corporate investment bank, wholesale, securities, retail now also have to lock arms and join their chief compliance officer colleagues to sign their name on the dotted line. And in some regions of the world, we talked earlier, there's more personal liability and responsibility that they have. So this is no longer just the chief risk officer wondering how to squeeze in ROI for cost savings and reducing the number of analysts. We're seeing institutions and CEOs and board conversations embracing this technology because they see it as a source of competitive advantage while also helping them to be more compliant and safeguard against risk.
True. And we've recently seen a case which has been going on for a long while with Wells Fargo in US, where there were some issues in the retail banking and now compliance or the technology is actually seen more as an enabler rather than just stopping the spread of illicit money. Sorry,
Sorry, I just wanted to add from experience from that point of view, is that compliance is getting dragged into these conversations because we're the pain point. I want to be very honest out here, is that I get bombarded by marketing, by business consumers saying everything is fine. Guess what? I'll give you an example of there are colleagues here from that institution that we're partnered with. The issue is everything looks fine till the point the person gets screened. That screening takes some time. And normally with wallets, people are used to having their transfers immediately within the country, just to example. But when they're doing it off their phone, they're saying, I got a call from one of the people that I put onto that app, and they was like, Mohammed, I just did the transaction, and I didn't get my transaction reference number. It's been 10 minutes since that has happened. And I'm like, oh, yeah, actually, yeah, I mean, it will be coming through. We're just doing some cross-checks. We're checking with the recipient, just making sure the name is okay. I had to come up with it because everything worked, except for the point that we had that regulatory obligation to be able to screen the person against those millions of records. And as you can imagine, it comes under retail banking. And then we have the ladder when it comes into the last piece which it gets screened. So I just wanted to share the experience of you that now you will start to see that as these guys try to follow GAFA, they will see that they would like to mimic the experience which is frictionless. Unfortunately, I don't know if anyone, or we can have a poll on that one, and will agree, is that cross-border transfers cannot be as frictionless as everyone imagines it to be.
Sure. So definitely gone are the days when you would wait 1 or 2 days for your payment to be
No way.
credited, and consumer expectation is for an instant payment
Yeah.
transfer, which leads a lot of burden on, again, compliance to
Yes.
make sure the money is flowing through the right channels. As you would have noticed by now, I'm more of a car fan, and I'm going to use another analogy. We talk a lot about engines of the car or the bodies of the car, which is the technology, but very rarely we talk about the innovation or the new stuff which is coming in on the data side, which is the fuel which is driving the car. Again, very, very keen to get audience opinion on this one. And again, you'll have a question on the screen in a moment here. What is the importance, as per the audience in the room, of data in compliance technology specifically? We can actually enhance it to the regulatory technologies for achieving desired outcomes. A, data is not important at all. B, data is important, but technology is more important. Data is more important than technology. And then finally, they are both equally important. And again, when we refer to data here, we're talking about internal and external data. Okay, that result gives me a lot of relief coming from Refinitiv. So it's good to see that audience believes that at least data and technology are equally important. Jesse, Ed, do you see any disconnects
I
there?
think that is exactly right. You know, on the one hand, if the technology is fantastic, but the data is flawed, there's not going to be the value add that you need. And on the other hand, if the data is fantastic, but the technology doesn't exist for deployment or integration, again, you're going to have the same issue. So
Right.
very close to kind of an even weight, if you
Sure.
ask me.
Again, I remember my conversation with some of my banking CIOs. They always had this problem of not getting the right results. The compliance is not happy with the false positives, and then there are many false positives on the anti-money laundering side. And then I said, have you ever looked at your internal data quality as well? And they said, no, we don't have a program as such. The moment they implemented a more advanced master data management program, the results were far more better. So definitely, I think there's a lot more work that the organizations can do on internal and external data, and I'm sure that's going to give some positive results. Mohammed mentioned at the start of the session that the audience will be very, very keen to ask questions. So we've still got 12 minutes here. We're going to open up for the questions, but just one final comment from all of you. If I am a big bank in the region, and Omer, I'm hoping you can answer that question, and then Ed, you can comment. If I'm a big bank in the region, I have got fairly good technology footprints, so I have kind of figured out most of my business aspects using technology. What is the next thing that I should look forward to? What is the next technology program that I can implement? And then at the same on the reverse side, if I'm a small company, have not really got anything in place, what's the right place to start with?
Sure. Excellent. So I think, if I'm a big bank and I seem to have got it right, I would actually be very worried about how the other institutions are doing. Simply because if anything goes wrong with one financial institution in a jurisdiction, it actually has a reputational damage for the entire jurisdiction. I find it very surprising that financial institutions don't collaborate when it comes to regulatory compliance, because your suspicious transaction or your transaction monitoring is only as good as what you have access to. But imagine if at a macro level you could have transaction monitoring done at a national level or at a regional level, how powerful that becomes for everybody in that sector. So not just the big institution, but also the small ones. And I personally think that it's about time that institutions do start thinking about collaboration, because the financial network is so integrated that if one institution has any hiccup, there is certainly a knock-on effect on the others. And in my view, that it creates a win-win for everybody rather than a you win and I lose kind of situation.
Great, thank you. Ed, if I'm a small bank, small financial institution?
Sure. The first thing I'll say is I'll wave the flag of joy because technology is actually the great equalizer. There is no distinction between small banks and big banks for the benefits that an institution can receive. And you only need to look at some of the example companies that Mohammed talked about earlier that all started off very small but became very large disruptors for their industries. But I'd even go one step further. And I'd offer some specific guidance for the smaller banks on how to apply the new technologies. If you want to experiment with machine learning, learn about unsupervised machine learning and apply it to your transaction monitoring rules. It makes it very easy to take something that is very complex and use technology to tune it, which is usually the bane of existence when you're looking at a transaction monitoring program. In the area of making your analysts and your investigators much more productive, explore robotic process automation with intelligent search capability. It will help a single analyst do the work of 10 to 20 analysts, and it will make their searches much more effective so that it reduces the noise. So it's a great enabler, an equalizer for small banks, and be smart about how you apply machine learning and robotic process automation technology.
Great. I'm not going to let Jesse and Mohammed go without asking you a similar question. Any quick advice for regulators here? And any quick advice for startups?
I mean, quick advice for regulators in the context in relation
To technology.
To technology? I think I alluded to this before, but it's not only embracing technology, but it needs to be a partnership with industry. It needs to be a partnership with industry, working together, identifying what solutions meet the needs of the regulator, and then obviously industry is going to know and be comfortable using that. When everything is aligned, you're going to then see less enforcement, right? Because everybody's going to be on the same page. This is something historically that we haven't had. But when you talk about partnerships, you start talking about public-private partnerships, and now there's been a drive towards that, I really think that is best case. And for startups, again, in relation to technology, a lot of it is just around knowledge. And when we talk about knowledge, not only identifying technologies that will assist them, but also identifying the regulatory regimes that they exist under and making sure that they are compliant, which I've seen in relation to startups is in some cases, in some jurisdictions, a big issue. Not necessarily here, but in general, globally, that's been one of my takeaways. So.
Great. Mohammed?
For the regulators, just give an opportunity for the fintechs to have a voice with them, trying to understand what their technology is, and trying to mentor them a little bit as well, because they don't understand the banking industry that well. I think FCA is doing a pretty good job there in the US as well. They are actually working with the regs. In terms of startups, I would like to see that, I've started seeing that already. Don't be a disruptor, be a partner. I think see the banks as partners where you can add value, investigate how open banking is operating with APIs and stuff like that, and see how your product can provide value add to the banks and to the GAFA.
Great. So key takeaways, if you're a regulator, be open. If you're a tech company, be smart. If you're a big bank, look at your anti-money laundering program again in a holistic way. And if you're a small bank, there is nothing called a small bank or a big bank. Thank you to the panelists.
Thank you.
Thanks for spending this time and educating us. I hope all of us are in the room are leaving with one or two positive aspects from the discussion that you could apply in the organization that you represent. Great. Thank you very much.
You.
Thank you.
Thank you.
Thank you, Sasha.
Good meeting you.